How does one play the real estate cycle? Through the real estate companies or through ancillaries?
So real estate, so markets are very smart. So real estate companies themselves have had a massive run last year, if you see, and now they're correcting. But I would be more constructive on the building material and mortgage finance, because it is a play on the entire I mean, you're not betting on a developer, you're betting on the real estate cycle. So I think better way to play, unless you have very high conviction on a particular developer and it's available at a reasonable price, which is hard to find actually. But and we have seen what happened in the early cycle with real estate developers when it really, but building material companies will still have reasonably good return ratios, balance sheets will be better, so they won't have a massive decline whenever that happens in terms of balance sheet risk, basically.
Interesting.
And yeah.
So then my follow-up question to that is, that when I hear the commentaries, plywood companies talk about capex coming up each of the next 5 years because they see a cycle. Paint companies, evergreen, so to say, the commentary from Asian Paints is buoyant almost every single time that I talk to them. Tile companies now have a much better domestic scenario as well, as compared to previously. And I think imports have trickled down quite materially, if I'm not wrong, is what I hear. So and steel pipe tubes, I mean, those companies as well. So almost everything within this ancillary space is sounding very positive. Where is it that you find the biggest bang for the buck opportunity within this very wide bucket of real estate or building material companies?
Yeah, so I think you'll have to take a stock specific view, but some of these companies, like we have listed down report itself, I think Green Panel and a couple of others, I think we like some of these companies. They've done exceedingly well in the past, in the recent past, in terms of performance. But it will be case to case, because some companies will see margin pressures or higher competition and things like. So it will not be a one size fits all kind of a thing. You'll have to do stock picking here. So the macro picture is clear, and our experience tells us that a macro picture in terms of demand doesn't materialize into great stock performance at times, because you may get the macro picture perfectly right, but your stock selection may be very bad, basically, and you may end up with losers because someone will win at the cost of others, and he'll beat out the others, basically, and there will be market share erosion and things like that. We have seen time and again. The story of the macro story is perfect, like let's say an auto, or we have been seeing the demand for certain categories have been rising, but value has been created only by one or two guys. So now, once you establish that this is the macro story, do a deep dive into that company, see whether it is insulating its balance sheet, it is conserving its balance sheet, it is growing in a way which is measured, where it has strength, it's playing to its strength, the management, quality of management and the focus is great. Go with that, and that will play out. This that will give you good valuation opportunities.